Good morning. Thank you very much, Melinda. I'm just going to introduce a few of the numbers that are sort of relevant to this debate, hopefully to then fuel the conversation. Bloomberg New Energy Finance, we have about 200 people worldwide, and we sort of analyse all the trends that are going on in what we call the low carbon transition worldwide. And we've got sort of people dotted around in all parts of the world to follow exactly what's happening in each region. So first of all, if I can make this work. Yeah. I was going to look at the sort of latest trends in terms of investment figures. There's a picture here, if you can make it out, of the Block Island offshore wind project in the US, which was commissioned last year, one of the first projects in offshore wind in North America, so quite an exciting development there. These are the numbers that we crunch from the bottom up on the deals and projects that are being done in clean energy worldwide. And you can see a trend that was very sharply up during the previous decade and has bumped around the $300 billion level over the last few years, $287 billion being the last figure in 2016. As you'll see from what I'm about to say, there's kind of two ways of looking at this. One is, that's a hell of a lot of money going into clean energy. That's great news. You could look at it and say, well, it didn't grow last year. In fact, it fell a bit. That's rather disappointing. So let's go on and sort of have a look at where we get to that. The numbers are made up, and apologies, you won't be able to read the small print here, but I'll talk you through it. From the left-hand side, you've got sort of early stage investment in venture capital, corporate and government R&D, and private equity investment in specialist clean energy companies. And by specialist clean energy, we mean any company involved in renewable energy, excluding large hydro, and also any company involved in energy smart technologies, and that includes energy efficiency, smart grid, demand response, and electric vehicles, and also energy storage. So things like sort of battery companies are included in that. So that early stage investment, if you could call it that, takes you to $47 billion in 2016. You then get the largest slice of investment, which is renewable energy asset finance, and that's the financing of wind farms, solar parks, and so on. That was $187 billion in 2016. There's also some digital energy asset finance going on, so smart meters, smart grid, storage projects, another 16 billion. Then there's 40 billion of small distributed capacity, rooftop solar and other small solar projects. That takes us to the 287 billion. And then last year there was a record amount of acquisition activity in clean energy, $117 billion worldwide. So that's people buying projects, people buying companies. So moving on, what's happening by region? Well, you should be able to sort of discern from this that patterns have shifted a lot. As Melinda was saying, Europe was definitely the sort of biggest part of the world for investing in clean energy a few years ago, about the turn of the decade. And Asia has moved into that lead position in recent years, with China particularly strong. But actually in 2016, what we saw was Europe holding pretty firm, the Americas falling back a little bit, and Asia falling back quite a lot in dollar terms. And we'll come to the reasons for that. So some of the features of 2016 that we saw in clean energy investment. First of all, there was a big slowdown in dollars committed in China, particularly in the second half of the year, down to 26% year on year. The Japanese solar boom also cooled last year, and going the opposite direction, there's a big offshore wind boom happening, record figures invested in offshore wind worldwide in 2016 of $30 billion worldwide. And then in the US, there was a small fallback in investment there, even though the tax credit programs have been extended there. People aren't necessarily in a hurry to move because they got 5 years to do so. Now, the other big thing that was happening was costs. So remember that investment trend. appeared to be going down, but actually the costs in both wind and solar were falling very sharply. So both wind and solar saw average capital costs down by well over 10% last year. That was also true in offshore wind. It hasn't always been the case in recent years. So despite the falling levels of investment, there was actually record amounts of clean energy capacity added in gigawatt terms. So in the case of solar, it was 75 gigawatts against 56 gigawatts the year before. So we've never had so much wind and solar installed worldwide. Now looking at Europe, just very briefly. Oops. I mentioned that the European trend had sort of flattened out in recent years after coming down from the peak at the turn of the decade. And what this chart shows is a sectoral mix. So in the sort of 2010-2011 period, it was very much dominated by small-scale solar, particularly in Germany and Italy. That's fallen back very, very sharply in recent years. Onshore wind has kind of been fairly steady, but the growth area really in Europe has been offshore wind, where we've seen some really huge financings in the last 2 years, with last year being a record at around $26 billion. So moving quickly on to policy, picture here of what the Swansea Bay Tidal Lagoon project in the UK is supposed to look like if the government gives it the go-ahead in the next few weeks. It'll be an interesting decision, whichever the way they go on that. One of the big things that's been happening on policy is the move to auctions. So instead of having feed-in tariffs and green certificates, countries around the world are increasingly moving to auctions as a way to allocate renewable energy capacity. And that's resulting in some staggeringly low prices for projects that are going ahead. So I've noted sort of 3 records here. Solar, the lowest one that we've seen, $29.10 per megawatt hour in Chile. Onshore wind, $30 a megawatt hour in Morocco. Offshore wind, $55 per megawatt hour in Denmark. So much, much lower figures than anybody would have dreamed of a few years ago. All these places have got their own particular characteristics, and you can't say, well, that's the sort of the milestone for everywhere else in the world at the moment. That's certainly not the case. There is an average figure which is different, but it's a real sort of symbol of what's happening in terms of costs. And auctions are spreading around the world. This is a map showing a hammer for every country in which some kind of auction mechanism is being introduced or has been introduced to allocate renewable energy capacity. And you can see it's pretty widespread now. Started off in places like Brazil about 5 or 6 years ago, but has really spread, and Europe has picked up the auction baton as well. I wanted quickly to look at what's happening with levelized cost of electricity per megawatt hour, because it's not just about the cost per megawatt, but also how much it costs per unit of electricity that you generate. 3 lines here. One is solar, which has been down massively since 2009, so about a 70% reduction in levelized cost of electricity. The line at the bottom is onshore wind, so although it looks fairly flat, that's only in relation to the comparison with solar. It's actually fallen by 20% or so over those years, which is very significant. And then the line that sort of goes up and then down, that's offshore wind. So for a while, projects got more expensive, but recently there's been a big focus on costs, and costs have been coming down rapidly in dollar terms. Now, what about electricity? A picture of a LED here, because the revolution in lighting has been sort of massive influence on electricity demand worldwide. And what these 2 lines show is the top line is GDP growth. So although it doesn't feel like we've had great economic growth in the OECD countries in the last few years, there has been growth. But what we've seen is electricity demand has not really grown at all. So the 2 lines have completely separated from each other. We haven't seen that happen before, and it's massively significant in terms of electricity demand, the position of the utilities, and also the outlook for emissions. So what about renewables as a share of electricity consumption? I couldn't choose every country that's relevant to the panel, unfortunately, but I've chosen 3 countries, Germany, the US, and the UK. And you can see in each case, renewables are rising as a proportion of electricity produced. In Germany, you'll be pleased to hear, is out in front with a figure of of over 30%. UK has risen very sharply over recent years as a result of the policies that it had in the first part of this decade. And the US, despite the gas revolution there's also been a rising share for renewables. What does it mean in terms of emissions? Well, again, I've chosen these three countries. If you look at the worldwide picture on emissions, it's not quite so encouraging. It's been kind of flattish the last couple of years, but most projections are for worldwide emissions to increase over the next decade as more countries sort of build up their electricity generation. But what we're seeing in emissions in Germany, the US and the UK, slightly different pictures. Germany made some good progress in the sort of early years. The trend seems to have flattened out recently. Some of the reasons to do with what the minister said on lignite, for instance. The US emissions went up for a considerable period, but have fallen back more recently as gas has pushed coal out of the system. And in UK, the figures are quite remarkable, really. Coal has been pushed down to about 4% of electricity generation, the most recent figures, and UK emissions are down to about 50% of what they were in 1990. Not all to do with choices of generation, but very significant nonetheless. So I'm now going to hand back to Melinda. Thank you.
Thank you very much.